Stocks closed slightly higher on the day as Wall Street digested the latest set of CPI data, which showed that inflation, although not declining as fast as many would hope, is not spiking higher as many have feared. Core CPI increased 0.2% month over month, in line with economists' expectations. Now, comparing the latest CPI data to last week's labor data, it does show that there's a decline in consumer purchasing power, as wages increased only 0.1% month over month compared to the 0.2% core CPI reported just earlier today. Now, going forward, we should see that inflation remains moderated given the last 2-3 months of month-over-month data. Over the next year, we might see inflation come in right around the 2% target established by the Fed, and the market sees that and decrease the odds of a rate hike in September. It is important to note that there is one more CPI report between now and next month's Fed meeting, but as long as prices don't explode, we shouldn't anticipate seeing a rate hike in the coming Fed meeting. It's also interesting to note that though this was a US-specific macro data point, there was interesting price action happening in the currency markets, especially when you look at the dollar compared to the yen. After this report came out, the yen fell against the dollar, which is interesting and worth noting because just last month, the US and the Bank of Japan coordinated their buys in order to support the yen in an effort to keep yields here in the US controlled. Now, if you want to know what this latest CPI data report means, along with last week's labor data and how it all connects to the yen trade, be sure to subscribe to my YouTube channel. I'll be posting more detailed video covering all of this later in the week. Until then, protect that lunch money.